Hello everyone. Today we're gonna have a daily recap. We're gonna do that every day. It's like how to understand the days. Okay, nothing is random in the market, even if it seems difficult, but they have logics behind everything that they do. Okay, so we're gonna try to understand everything. Please everyone bear with my English. English is not my first language, so you know let's learn together and let's improve together. We're gonna analyze the day of April 16, 2024. Let's analyze it together. We're gonna do that. Okay. Let's go back here. Let's go and replay on that day. Let's recap the day together for you guys to understand. So let me check something. Okay, that was Monday. Yesterday, big ranging day. We had two relatively decent ranging day. So Friday, you can see both Friday and Monday, they were ranging to the they were trending to the downside. So Monday ends that way. Let's go on NQ. I'm gonna analyze it from NQ instead. Alright, so let's go back here and then here. How do we understand price? Let's remove this. So Monday, after two big ranging days, so we expect a seek and destroy profile day. So this is the observation. This is what we notice. Okay, so seek and destroy day. Before the day started, I predicted that it would be a seek and destroy day bullish bias in a bearish market in discount. So I know everything so that I can refer back to them in the future. Okay, well, when to expect them? Those type of day after one or two big trending days. Okay, price will draw because it's bullish. Price will draw to the upside, but with big retrospect enticing sellers to FOMO after price. Okay, price will revert back after taking buy side to offset anyone chasing price. Play in the extreme during the day. Do not engage in price in the middle. Do not ever. Only enter when price has taken obvious sell side, because price is bearish more or less. Even if it's in a seek and destroy environment, never chase price. You will pay dearly if you ever chase price in a trading day profile like this. If you are fortunate to enter in deep discount, extreme OB, target any fair value gap in buy side, or any fair value gap or buy side liquidity in premium. Okay, so we're gonna analyze the day for today. Okay, now we have that blueprint to know what to expect. Okay, now this is the day. We're gonna go. We have this. This is This is a new day opening gap, high, consequent encouragement, and low. So we have this. I put in the 5 minute. Okay. This color represent pretty much from 6 to 8. Okay, and at 8, I mean at from 6 to, yeah, kind of this, and then we started at 8. At 8 we have a different session. This is the Asian session. So we can see the Asian session sweep that high, and then continue lower, right? Okay, so look at the profit for the day. We took buy side, we displaced below a low, 5 minute. This is what we can see. We displaced below a low, 5 minute, swing low. We see fair value gap, order block, 5 minute. We can enter here, okay, and target this. That draw didn't meet yet, so we expected this is the day. This is a easy trade here. That OB stop here, targeting this. So order block here, here. You can target here. You can target this sell side, you know. Easy. Your stop could be at the top. Your stop can be here as well. You don't need to. You can leave your stop just above that OB. And then yes, that will be a really nice trade. You don't have to go for the fences. Now, to analyze that day, you could look here to here. The projection, you know, if you measure and you project it to the downside, I like to target 0.5. I don't like to target the one, you know, in second destroy the environment. So if you enter here, if you don't want to get out here, you want to, you know, you want to press it, yes, you could force it all the way here, and that would be my max. That's one way of doing it. I'm going to show you multiple ways of doing it. You could do the optimal trade entry. You can see from here to here, this is the optimal trade entry. You see how we went exactly here. Again, see, you could target one standard deviation. You can see how the body respect here. The low on that candle is 1975. Okay, this is 1975. Yes, you went past it, but the next candle actually respected. So yes, those are two ways for you to get it. So because we are bullish for the day, so we expect, if we had a week consequent encouragement here. That's this line, week consequent encouragement. So let's see, we tap into it, I know, we went lower, we tap into it, and then should reverse. Now this is an entry as well. For those, I like to enter right there, stop 10 points. I like to give 10 points for those and target, you know, no confirmation, nothing. You price get to here. This is a strategy by itself. Stop 10 points. You can go and backtest it. This really works. 10 points and have a set 1 to 3. So 1 to 3 easy. You could target that low because it's easy. That low, fair value gap here, and you know, this is an easy trade right there. Okay, boom, you would have won that trade, you know, here to here. That's easy. Could target. You don't need to target for the fences. Yes, you could push it all the way to that other block, but I don't know. So I would rather easy low hanging fruit. That's 1 to 4. I mean, if you have that, that's it. you have two opportunities. You could enter here, targeting here. You could enter here, targeting that fair value gap. Okay, now you can see one standard deviation as well, line up exactly with this one. I like to take profit at 50%. That doesn't mean that we cannot come here. For taking profit, I'm doing that here. Trust me when I tell you that, because I've been there, done that. So this is the midnight open, this is the midnight open price. Now if we're bullish, we wanna see smart money accumulate below here and then below that midnight opening price. So we wanna see London more or less take that sell side. That would be perfect for us to continue high. Okay. See London consolidate, it doesn't do anything. London consolidate inside the Asia one, but on top of here. So yes, you see, as you enter here, like I told you, you could target here. This is for you to study. Because you enter here, yes, your draw could be the day opening gap, because you know London more or less will test that area. But I would advise you to take profit here, leave a runner if you have two contracts. If you are to trade, let's say with 15 MNQ, MNQ, I said not NQ, 15 MNQ, where it's like one contract and a half. So you can sell 10 here, okay? You can sell 3 here, and the rest is for here, okay? That will be up to you. This is not a class about how to take profit and everything. We're just reviewing the day. So we have London, we have the Asian range. London didn't take nor the high nor the low, because we're bullish. We wanna see, even if we're on the sick, and yes, that's what we want. We wanna see this get taken here. This is an easy trade here. Look, through all this press action, this is your trade. This is easy trade, baby. Fair value gap, order block, last two candle, order block, fair value gap. You enter, you stop here. Where do you target? Did we take that low yet? No. So we could target that low. This is easy. You can enter here, target that low. You don't need it for it to come here. You can just target that low, and you see here, this is perfect. We give you that. You target that low, and the rest is below that, or you can sell exactly at that week consequent occurrence. Okay, boom. You take right after you take that sell side. Now you're looking for entry. You're looking for entry to the upside. Again, you bullish. Why we were bullish? And let me tell you, we had a draw. We have a draw on liquidity. Okay, let's put because okay, it's not OB. 5-minute zone. Okay, we have that. We're gonna watch that fair value gap. Boom, fell, and as this is filling, you could enter. This is as well. This become a breaker. If the market gives you an entry, you could enter. internet is having an issue, so let's pause it. Alright, let's continue. You see the market, like, quickly. Those are the trades that you want to get in, because a lot of times they are quick, fast. You know, we have weekly wick consequent. We have the weekly wick consequent encouragement. We had a side right there. You see, as soon as we take that, we jump up. So if you jump into the 1 minute here, let's see. Yes, if you jump into the 1 minute, you could find an entry. The same thing I was looking for, that inversion, we can look for it here. Alright, you see, boom, print a low, high, lower low, sweep. This is very important. This, we sweep, we couldn't close, we couldn't displace below that low. We change the state of delivery here. That black candle is another block. Here, you already anticipate this is gonna be an inversion. You don't know how it's gonna trade to. Sometimes, you know, goes quick. In that case, that black candle, this is another block. Okay, you have your other block here, and you do have your fair value gap right there on the 1 minute, right? The first fair value gap right there. Okay, now you may ask yourself where this is going. Okay, this is the other block. This is mean threshold of that other block. This is the body to body. Here, this is mean threshold. You don't need to enter, you can just enter on that fair value gap. This is where do you put your stop. This is where you make the mistake. This is where I make mistake as well. When you enter here, yes, your stop has to cover the low at the beginning, right? So your stop is right there. You enter right there. At least you see how it is at midnight open. You see, those are easy trade. You could take that trade and be done here, but you won't be happy with it, right? But because you saw that you leave all that, you know, low resistant liquidity, see, equal low, equal low, equal lows, all those relative low. Yes, you could target again the gap. You know that this is gonna be a factor. The gap for the day is a draw, always. Don't forget that. So once you hear, if you see any market structure shift, your eyes should draw to, like, you know, right there, midnight open price. This is a first target. Yes, you may come here and then reject a little bit before going higher, but remember, you bullish, you below the midnight open price. This is a very good place. That's why it goes very, very fast. Okay, so this is an entry, this is an exit right there, this is your exit. This is one way to do it. But remember, the draw, my draw for the day was the FEG low end. So there was a fair value gap that we had on the daily. I know that this was a draw. We left that fair value gap. It was a BC. We left it. So now I know it is a draw on price before we can continue lower. Okay. So this was my draw for the day, and I anticipate that we will have a fair value gap on that, you know, day forming. So those are the things that you need to tell yourself. Or we're gonna have a fair value gap that day forming. So you anticipate this is gonna be a very low range day, so you should lower your expectation. If it is a low range day, what you need to understand is, if it is a low range day, the market has to spend its time. Okay, so the market is not gonna be in a hurry to go anywhere. It's gonna go up, come down, put some people out, come up again. It's still gonna go towards the drawn liquidity, because nothing is random in that market. But you need to understand that you cannot trade it as a trending day. You cannot chase price, because you're gonna suffer. Okay, you're gonna suffer. When you're looking at it at the bar we play now, you don't understand how it makes you feel, but trust me when I tell you, it's a different price action. You'll feel it. Price is tricky. Price is weird. By the time that you realize that it's going down, it's already went down. By the time you enter, it reverses completely. It was designed exactly to make you feel that way, and it knows exactly when you feel that way to go the other way. Pay attention to those days. You'll see that exact thing. Okay. All right. Let's go into 5 minutes. Okay, again, you cannot take this draw, because this is the final draw. This was my final draw. So okay, again, you could enter here, get out of here. Now this is Asia range. Remember, try always, let's calculate on top. Projection is the projection. Okay, we have a projection. We have 50%. We have one standard deviation, of that. You could calculate this one as well, but because it is inside the Asia range, that's why I picked this one. This will switch this. So if you enter here, your exit should be here. Okay, no question asked here. Now this is a trick that I know. I'll give that to you. Always, if you, let's say you want to get out here, right? This is the real buy side. Those equal low, right? Those equal high. Sorry. If you see that price comes here, drop a little bit before going higher, I'm gonna give you the trick. This is the last manipulation taking a high before taking a high. If you wanna push your trade to the max, calculate this, exit at 50%. Again, calculate this. Instead of leaving here, you could push your trade all the way here safely. You calculate the last manipulation before taking a high, and you get 50%. You have one standard deviation. I give you the conservative one. Yes, you could force it here, but no, trust me when I tell you no, here is fine. Do you see how it went here, and then dropped? Trust me, you wouldn't feel comfortable in the trade. Yes, when you're looking at it, in hindsight, you may think, oh, I may hold it to here. But that last manipulation, this here, you do have a breaker here as well. From here to here, this is a breaker. Because it is very, very small, and you can tell yourself, okay, where did we hit before we take out this sell side? Okay, we went past one standard, we went past the one. So when we take this is what you tell yourself, what level do I have, what levels do I have above the sell side? I have two standard deviation. This is the easy target, and you have 2.5. You could force it here. Yes, it went all the way to 3. You don't need that. You see how you respect the 3.5? You don't need that. You could get out here easily. From here to here, you snatch 3 points. You could force it here. That would be my max. I get 2.5 easy. But the last manipulation here, like I told you, this is your easy thing. That last manipulation, 0.5, you get out of here. Alright. Now, remember, you see now, you take buy side again. Look what happened. You take buy side. Let's calculate where price drop. How random that is, huh? This is the one standard deviation. Plus or minus. Whenever you have plus or minus 2 to 3 handles, look at how. Right at 1, you see if you're forcing the 1, you'll be lost. Now, if you're very forcing, I would exit, at 0.75. I don't put it there, but this is another level. When let's say you see, well, how far can you go? I wouldn't go far. If you wanted to sell above that equal high, the farthest you can go, look for the last drop before taking that high. This is you sell at 0.5 or 0.75. I tell you 0.5 because you won't understand exactly when the market is strong in a direction or weak. So that would be the issue for you guys. Okay, so now you can see, now we take buy side. Look, we drop lower. Fair value gap. This is a balanced price range, pretty much. Fair value gap up, fair value gap down. This will be, look, this is your breaker. Come back to it, that fair value gap. Now this is a sell. If you were to sell here, if you put your stop here, you wouldn't have any problem so far, but I don't know. You see how, that drawdown, you could, if you enter here again, your draw, if you enter here, because we already went here, if you enter here, your stop is above here, your draw should be midnight open price. Or you can blend it. You calculate more or less from here to here. Okay, this is premium, this is discount. So now, yes, in discount you see this, you see that fair value gap as well. You wouldn't need to push it here, you can push it to here. If you make a trade idea, this is what you can do. You set, you forget. If you really want to trade well, this is your balance price range. You see, you enter at that balance price range. Your stop is above here. Oh. Yeah. You would target the midnight open price. Your stop is right there. You could target here Those are all the different trades that you can take. Okay. There are trades that I won't talk, but they are easy trade. Once we do that, this is a trade in itself. Enter here at that gap. Again, you enter consequent encouragement 10 points. You target the nearest liquidity. I know that there's a balance price range here. I know that there's a fair value gap here. I know we may come back to here. So I enter here, very tight stop, and then you look. Wow, you may think this is not a trade. Yes, this is an easy trade in fact. In the 1 minute, you can see if you long, I like to enter here. Again, 10 points, max. Target right there, that fair value gap right there on the 1 minute. OB, you can target right there, easy. See? See? Easy. Like easy. Now, once we hit here and we go over there, this was the last order block, right? And this is the strong order block because it created that inversion. See that inversion? Boom, boom. You have the fair value gap here. This is another block here. Look, guys, you have so many trades. You may think it's funny, but you do have a lot of trade. You may get long here in that order block. Again, stop loss 10 points. But because you're bullish on that one, you have to choke the price. Here, I would only target probably that buy side. If I were to take that trade, those equal highs, I would target them. That's it. I'm sorry, I wouldn't know to target all the way here. The only logical again place I would target is that fair value gap. I wouldn't target that buy side. Yeah. So okay. And let's go back to the 5 minute for me to finish today for you guys, to show you how many opportunities you have. So okay, you see, you come back all the way down. Those last three down, no, the last two down candles, there are other blocks. I'm sure there's another block in the 15 minute as well. Yes, that 15 minute is another block. Okay, that 15 minute is another block. Okay, 15 minute will be, you tap into that other block after the race. Okay, if you enter here, your stop below here, you calculate the midpoint of that wick, you put it below here. Below that, that's easy as well. So doing, you see now, doing the, okay, now we're gonna put that, okay, we enter here. This is the range that, this is the opening range gap. You enter here. Once you enter here, this was easy for me to understand. Now you may don't think that I was expecting here. This is the way price works when it is bullish, but in a bearish environment, when you want a full bearish but don't want the the buyers to benefit from it, you'll see that type of characteristic. You see, price try to go higher at midnight, I mean at 9:30, price try to go higher, go lower, take sell side. Right after taking sell side, you'll see it will revert back all the way to the extreme, go to the other block right there again for the third time. You see, one, it does point a low, point a second low. Yes, usually it looks like a three drive pattern, but you have to understand, it has to make sense. You tap into that other block, from there, from the time that you trade right there, this is a change in the state of delivery. Yes, you could enter here. Your target, easy target could be here. You see, you can enter your target. You have to understand draw on liquidity, and you can target here again. Now, how do you get out? Guys, it's 9:30. That first move, you see that first, that like here to here, this was pretty much the fake move up, right? This trap was the fake move down. So you have so many things to calculate. You see, from here to here, you have this. So look at this as a Judah swing. So that move up, you have here, you have those equal highs. You can get out of here. Again, remember me, I like to target 0.5. I don't like to target here. 0.5 is fine, it's enough. This is one way. You could calculate here again, from here to here. Again, you see, you have here, you have, let's see, you have okay, let me remove this one. Okay, if you take this one, you have 0.5 here, look, and you have one here. I don't know what's going on here. When I press this, it doesn't work. I don't know what's going on. The internet is not working well. Okay. Alright, perfect. Okay, we come back exactly. Those are the trades I like to take. I have another block, I have this, so I have something to lean on. Enter here, target here, this is easy trade, high frequency trading. But you have to be really good to do this type of things. Okay. Alright, okay, this is your exit. You see? That here, this is your exit. You take equal high, seek and destroy day. The day has to spend some time doing this thing. The draw is where I told you, but he has the entire day to do it. So equal high taking, boom. Look at this. For value gap, balance price range, order block. See, you could enter here, that order block right there. You could enter on that fair value gap. The reason why you try to enter at the extreme on those ones is because it's a seek and destroy day. Remember that. You don't enter here. You expect price, in fact, to go here. For bullish move, yes, you may miss it for the retracement. For bullish move will be fast. But for bearish move, it will give you a better entry. Remember that. If your bias is bullish for the day, even if it's a seek and destroy day, it will give you better entries like retracement on the bearish side. Okay, so this is, you can enter here, targeting that gap. This is an easy trade. Targeting those equals lows. This is an easy trade as well. When you're playing extreme, you can calculate this side to this side, and you take, you take 50% at the extreme. So boom, you take sell side here, volume and VI, you could target here. Like, there are so many things you can target here, it's not even funny. You have that unmitigated fair value gap, you have the error block. So this would be my last. I would target here. If I enter here, get most of your thing here, because price may retrace. This is a second destroy day. You target the sell side, those equal lows easily. That this is your exit right there. Now you could target, if you targeting the equal low, where do you get out? Here. Look at that inversion. Okay, that fair value gap right there, you can target here. If you want to find a place to get out, where do you get out? And the same thing, remember, before taking that low, we went up, right? So this is another way. Again, from here to here, he will tell you where to get out. 0.5 is an easy target. Like I told you, the last, like the up move before that up move before taking the low will tell you. You could target here. This is an estimation, right? Now you can find exactly what do we have here. Yes, we do have a small fair value gap right there. You could target here, or you could target that inversion. So this is, bang, you see that inversion? Give you reaction, continue lower, all the way down to here. That order block, you have that extreme order block. Remember, you're bullish. Okay, it's 10:30. Look at this. We're going lower. We take sell side. This is, now let's say those are the things that you learn with experience. Let's say you're expecting price to go higher from here, but remember, it's second destroy day, so price has a tendency to go to the extreme. So you see that you have that extreme order block right there. You may enter off of it. This is how it works. You see, price consolidate below that low, price manipulate towards the order block, price will distribute to the upside, and you have that inversion already. You see right there, you have the inversion. You could enter here. Your stop will be below this, and then yes, you see how this one, we give you retracement. That's good. Fair value gap right there. But this entry was correct as well. Okay. And then this is an easy target. This buy side is an easy target as well. Like I told you, you target, if you're not trading because you know price may retrace after taking buy side, you sell. You know, this buy side is in premium. So look, that's fair value gap, that OB. Look, you have the order blocks here. See, if you miss the entry here, he give you another entry here. Do not chase price on the way up. Wait for price to retrace. If you don't get retracement, you don't enter. Do not chase price unless you enter here. If you have the wherewithal to enter here, that's really good. Okay, so you see, price comes back again. You take the sell side in that OB, and then now it's easy. If you sweep that low, you enter right there. Right there. Sweep the low, you enter right there. Your stop is below that low. If you want to be safe, your stop is below here. Where do you target? You target here. You target right there. That's easy target. Okay. come back again, find some support here. See, price went up here again. Look at this week, the week that react to the order block. Okay, price respected 18.75. That high is 19.25 cents more. Price consolidate like a lot here. Alright. Okay. Now price take the buy side, the extreme buy side again. Sell aggressively. Boom. Same thing. Seek and destroy. Take buy side, revert. Take buy sell side, revert. Okay. So now it is 12. There was somebody talking, I believe, at 1:30. So you'll see price consolidate. Price spend a lot of time consolidating that area. Always remember, most of the time, if price is consolidating, the next move is usually, not all the time, usually it is a manipulation. Price consolidate. Price consolidate. And boom, when the guy was talking, 1:30, boom, price sharply dropped lower. Now, if I tell you I entered that trade as it's dropping, you wouldn't believe me, right? But I'll show you after. Boom, as it's dropping, you take the extreme sell side now. That sell side, and here we go. Boom, he went back to the consolidation box, to the extreme fair value gap, or the last 3 up candle order block, drop, come back to the week opening gap. I mean, not the week opening gap, range opening gap for the day. Price take sell side here. Take sell side like this. As soon as price takes sell side, if we have a candle close above a black candle, we in. Or if we see a sweep of the black candle, we in. Nothing yet. Boom. As soon as I trade here, I enter. I know that price will not most likely give the sellers the chance to exit. Yes, it gives them a false. It's like consolidation, or how they say it, base drop, rally drop, something like that. So it's like price consolidate, move. So when price comes here, sellers are gonna be introduced here to go lower. Yes, it works for a while. You can trade here, in fact, but your expectation should be below the recent low, below the recent sell side. Okay, not here. You shouldn't trade towards here. If you are, you should leave a very small portion. See price sharply move towards here. Okay, and this was the draw. This is my draw for the day, and be done with it. Now let's look at 12. Nothing is random again. See at 12, the 12 to 1. This is 12 to 1 session. launch session. Look at this, 0.5 into another block, targeting, you see, 0.5. 0.5, you have that here, and be done with it. We can still have to not forget, we can have this, the Asian range. It's very crucial. See where to push price max. That's it. But here was the draw, and that's it. We take buy side, we take everything and call it a day. And drop again. See this is it. Let's see what is that session gives us. All right, that morning session, look, the 0.5 gives us here. Now you expect price to reverse, okay, sharply. See how price, you could, believe it or not, yes, you could trade here, but you need to understand those days. Okay, you need to understand those days. I'm gonna show you something now. Now, for me to show you that yes, you can trade this entire thing and nothing is random, you just need to know what you're doing. I'm gonna show you. This is proper trading, just for educational purposes. Again, I'm not advising you to invest in the stock market. You may lose money. You may lose more than you have. So please do not take my advice as financial advice. Those should be only for educational purposes and for you to try on demo account. Never with live money, so I'm not responsible for any loss that you may get. Okay, so let me show you again the whole business. You may think I'm lying, that someone cannot know all those things. Yes, you can know all those things. Look at all those trends. Yeah? Look at all this trade for today. That's it. I have some losses. M and Q only. Look. See here? I enter with a lot of contracts. Here. Here. Look. 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 15 M and Qs. Okay. 10. 5. 2 contract left. 1 contract. And the last contract, you see? Okay. Now let's go to the entire business. Let me show you that yes, you can trade all this as long as you know what you're doing. You may scalp all this. You see? I enter here, I get out here, I re-enter here, get out here. Guys, yes, you can. You scalp here, I enter here, sell here, buy back here, resell. You see this whole business here. I know when to enter here, sell, enter again, sell. Here I sell. Here I buy. You see, as price is dropping here, I'm buying below this. I'm reselling here and here. Reselling here and here. I enter again here. Get out one here. You see the last two contract I enter. This is the last trade. Two contract right there. Two contracts right there. One I sell here. The second one I sell it here. Okay. See 59 right before it touches this. Okay, guys. So nothing is random in price. I'm not talking out of my ass. I know what I'm telling you. If you give price its time, you'll be able to do all those things. Yes, it may look a lot of trades, but yes, if you know what you're doing, you know the draw liquidity, you know what you're doing, you'll be just fine. But guys, it doesn't come in one day. It doesn't come in today, and I'm here to show you proof. I'm gonna be using that account only for it to show you. You see, I started it today, MNQ only. I'm gonna show you with MNQ you can still make money, guys. Okay, you can still trade it in your combine and make money. You don't need to trade NQ to make money. You can trade MNQ up to maybe, if you're really good at it, up to 5 contracts. I mean, up to 50 max. That will be your max if you're really good. You don't need more. So 50 MNQ is like 5 NQ. That's your max. But with 15 to 20 contract, guys, like 2 NQ, you'll be just fine. Okay, you'll be just fine. So I'm happy you see that. I have another video where I show that execution, the last trade I recorded it. You can look it up on the channel as well. If you wanna see it, let me pause it. I'm gonna show it to you real quick. No, you can look for it on my channel. It will be there. Anyways, guys, thank you. We'll be there for another day. This was a seek and destroy bullish day. Okay, so the draw was bullish, but to contend price within a range. Okay, guys, those are tradable days as well, but you cannot come as a newbie and expect to be able to trade those days. You won't be able to. Okay.